What's up, guys? Good morning. Just wanted to ask for a little bit of help this morning from the YouTube investing community, particularly the Bitcoin community. I am on a board for a local nonprofit. It's been around over 100 years, has funds built up in reserve, and those are invested in a managed portfolio at a traditional brokerage account. So currently, it's in a very moderate or moderately conservative portfolio that is less than 50%. I want to say it's around 40% equity and closer to 60% fixed income. Obviously, fixed income has been just a bloodbath the last 5 to 10 years. It's just been a horrible drag on the portfolio. So as you can imagine, the portfolio is going up in value, and it's beating inflation. But when you compare it to things like money supply growth and things like that, it's really not performing that well. It's also not taking advantage of, in my view, uncorrelated assets to the degree that it maybe should. This organization also holds some real estate that's not included in that. These aren't like real estate funds or anything like that. Like, actually just owns real estate that serves as an inflation hedge and buffer for things like that. But I am wanting to make the recommendation, recently made the recommendation and got it approved over time, that we hold a 2% position in gold. So we have started to move into that position, when it's at all-time highs. But, I do think it's going to offer us an additional slice that is going to be uncorrelated and is also going to be an inflation hedge ultimately, and a store of value if things go wonky with equities and fixed income. I am wanting to recommend an additional 2% to come out of that 60 some odd percent in fixed income and go into, or allocate 2% of the whole portfolio, take out of fixed income and move into one particular preferred equity for income purposes, but also for uncorrelated exposure to Bitcoin. And what I want to recommend is STRK. That is the company Strategy, formerly MicroStrategy. That is their preferred shares, one of their preferred offerings. It pays an 8% coupon on the $100 base price. It's selling for less than that right now, so I want to say its yield is about 8.5%. And that is perpetual. It's going to keep paying that. There's no call date on that, 10 or 30 years out. It's a perpetual dividend yield, and it's also got a convertibility option at $1,000 a share. Keep in mind, for the common stock, which is MSTR. MSTR is currently trading around $400 per share, and so there is upside potential for that. The question is, how do I go about proposing that to the board of this organization? This is going to be something that's a little out there probably, and I do want to explain that it's a Bitcoin proxy. It's supposed to perform in a correlated manner with Bitcoin, but if you look at STRK's history so far, it's fairly new product, so it doesn't have a long track record, but over several months, the correlation to the S&P 500, I want to say, is like 30-something%. So very low correlation to that, very low correlation to other fixed income instruments. It's going to be more correlated to the price of Bitcoin. But honestly, the correlation there is not all that high. It's not very correlated to the movement of the common stock. There have been days that common stock's down 2, 3, 4%, and you can see actually the preferred shares are up. So let me run through my reasons for wanting to recommend this, and what I'd like to ask, comment, and let me know how to tighten this up, how to, where the holes are, where the gaps are, what potential issues you see with adding a 2% position in STRK to a very moderate to moderate conservative portfolio for a long-term hold strategy for a local nonprofit. Keep in mind, those are not funds that have any immediate liquidity needs. There's really nothing on the table. Even catastrophic type events right now, we're well covered over and beyond what this amount that I'm suggesting. So this is more of a long-term position, and I'd like to recommend that we purchase a 2% position in STRK for preferred shares of Strategy. The reasons are, number one, I would like to get some proxy Bitcoin exposure. And Michael Saylor at a recent event outlined that he really has designed Strike to keep up pretty well with overall Bitcoin performance. And that's based on the fact that MSTR is designed to 1.5 to 2x Bitcoin performance, which does mean it has potential for larger drawdowns. Strike, because of its underlying dividend and because of its convertibility, it's got the upside to keep up with Bitcoin to some degree. But the difference is, and one of the things that our wealth advisor had an issue with about Bitcoin was that, the kind of common traditional finance belief, there is no underlying intrinsic value. And then it also produces no cash flow. So you've heard a lot of these, things, and they're understandable, and you want to address them. I think that Strike addresses these while still getting us the Bitcoin exposure that I believe is best, but also addressing the need for, or the historical desire for some income generation. I think it gives you both. So the way it addresses the idea that Bitcoin has no intrinsic value, no underlying value, is that Strike is a preferred stock in a large company that is listed on the NASDAQ, that is in the NASDAQ 100 actually, and is well on its way to being included in the S&P 500 in all likelihood. So this is a legitimate company. It's over $100 billion in market cap, I believe, at this point. And as a preferred shareholder, our organization would be entitled to a higher preference on the capital stack, which means we're above common shareholders if in the event of a liquidation or anything like that. So we have more of a claim, or a higher claim. So it goes bond holders, so holders of the convertible debt. And then there's two types of preferred shares. There's Strife, which is number one, that has no convertibility, would be kind of above Strike. And then there's Strike with a K, that is right below that, and then there's the common shares. So you end up with having a higher position as a preferred shareholder in a NASDAQ listed company, a public company that's been around over 20 years, and has an underlying business with income. And so, the idea of holding straight Bitcoin, I understand from a traditional finance approach, you don't have those things, but this allows us to get in and get exposure to Bitcoin in a responsible way with the downside protection of having preferred shares in an actual company. Of course, most of the company's assets are in Bitcoin. So you have to kind of keep that in mind as well. But that's the first kind of way that it addresses the concerns with holding Bitcoin. The second is that the lack of income was the second concern with Bitcoin, and that it's not producing anything. Well, these preferred shares are guaranteeing a perpetual $8 dividend on every for $100 share that's trading at less than $100 right now. So we could generate between an 8 and 8.5% if we bought in now, perpetual yield. So there is income built in. Then you'd have to kind of address the spinoff concern that, well, but how can you have confidence that that dividend is going to continue to be able to be paid? And the confidence really comes in is that they are under leveraged. Their debt that they have to service, their debt to market cap and that includes the convertibility of the convertible bonds, the convertibility of the preferred stock. If you include that in the calculation, they're less than 10% leverage over their market cap, and they're less than 20%. I want to say today they're around 17% as leverage as a percent, or debt as a percentage of their net asset value, the current market value of their net assets, which is mostly Bitcoin. They're like at 17%. So you could say they're under leveraged or they're overcapitalized in some ways, and they're probably going to increase that over time. But right now you can buy that preferred stock with the understanding that they can easily make those payments at the current time, and to have any issues with being well capitalized or being able to make those obligations, Bitcoin would have to sustainably drop over 80% and stay there for a long, long time. And so, a total and complete, basically the only way that Strike really fails would be a colossal failure in Bitcoin, which is not impossible, which is why I'm only suggesting a 2% position in this preferred stock. So, but it solves the problem of generating yield and paying you to hold it. So you have a coupon coming in at over 8%, and I think it's paid quarterly, and that's going to keep being paid. And they're able to pay it. And that's my belief, in having done some of the analysis and listened to the guys from MSTR True North and other people who really study this stuff and analyze the stock and analyze the company. We believe that, and I say we because I'm on board with what most of them are saying, is that Strategy is in a very good position from a capital stack perspective, from an ability to meet debt obligations perspective. They're in a good position. And so that's kind of the next point. So number one is you own a part of a company. So you do own something and you have a right to things in the event of a liquidation. Number two is you are generating yield in a way that, plain holding of Bitcoin would not. And then the third and final thing that they brought up last night, which is really, they brought up last night in the episode, or I think Wednesday night, the most recent episode of MSTR True North. That would have been from, if you want to look at the episode from May 14th. Check out that episode. And one of the key points that is really encouraging me to go ahead and recommend this is the idea that this equity has downside protection because of the yield, meaning if the price of Bitcoin starts to really go down, really enter a bear market and see substantial drawdowns, yes, you'll see the price of this equity start to draw down, but eventually it will not draw down as much as Bitcoin, because that $8 coupon for a $100 share, if the share starts trading for $80 or $70, and we saw this when Bitcoin started going down into the 70s earlier this year, that strike actually didn't keep going down as much because that coupon is so attractive. Because as that gets up into the double digits, because think about it, if it's trading for less than $100, it's going to yield a real yield of more than 8%. And so when it starts to trade down at a level where the yield gets up into double digits, gets at 10%, could potentially run up to 12%, you're going to have buyers come in because they want to secure that yield. That's a very similar situation that I found myself in back when I saw that Exxon and Chevron in the depths of the oil bear market several years ago. Well, the yield on their dividends, it was like, yes, they can definitely afford to pay these dividends, and it's like 8 or 9%, on these huge mega oil companies that are not going anywhere. And so it was like those yields, I think the dividend yield is what essentially turned those stock prices around and brought them back into a reasonable range. And I think you would see the same thing with Strategy's preferred shares, is that they would have some downside protection over and above what you would expect with just Bitcoin, because that yield is going to grow more and more attractive, and buyers are going to come in for that, even as Bitcoin might be tailing a little bit. So that's my ultimate argument, is that this gives proxy exposure to Bitcoin, gives us a really nice preferred share that is already showing really encouraging signs of being uncorrelated from the S&P, from bonds, and from a lot of other things that the organization already holds. And to me, it also gives that asymmetric upside potential that if Bitcoin went crazy, if Bitcoin 10x went to $1 million a coin in the next few years, if it happened, we would be along for that ride as well, with the upside of holding a preferred share that has convertibility to the underlying share of MicroStrategy, which would likely go way up in the event of a really raging Bitcoin bull market. So I think it just makes a lot of sense to complement the small gold position. If you can stay under 5% total for 2.5% in gold, 2.5% in strike, to get that Bitcoin exposure and to get that little bit of uncorrelated asset over there for that little slice. I don't know. I really like it. I'm not a wealth advisor, not a financial planner, not a certified financial analyst. Don't know a whole lot other than what I've learned through reading and studying and managing my own portfolio about portfolio construction. But it seems to me that it would be a phenomenal addition to the portfolio. It would add to the risk-adjusted return. The downside risk is so low at such a small position. The upside risk is the upside potential is asymmetric. I just think it's a great idea. So let me know your thoughts. This is an old nonprofit organization with a pretty substantial portfolio, way over and above their expected need for liquidity in the near term. And when I say near term, I mean decades. And I'd like to see us protected against potentially wild inflation and money printing. But I'd like to see us also be able to participate more in the runs of equities, as we've seen our bond portion of our portfolio underperform so terribly over the last few years. I'd like to give us some lighter fluid on part of the portfolio that allows us to participate more when things really run, when the money printer comes on and things really run. Let me know your thoughts. Comment. Let me know how I could approach this, what I'm missing, what I could recommend, what potential questions might come up. If you were on a board like this that was more traditional and more, we're going to do this moderate model portfolio and stick with it. Let me know what you think and what I might see, what I might hear, and let's talk about it. Have a good one.